Hey everyone, welcome back to Money Moves Weekly, where we break down the trends shaping your financial future. I'm Emma, and today we're talking about something that can literally change the trajectory of your investments, choosing the right broker in 2025.
That's right, Emma. I'm Daniel, and this topic might sound technical at first, but it's one of those decisions that separates the investors who just get by from the ones who actually build consistent wealth. Your broker isn't just the platform where you click buy, it's the ecosystem where your entire financial strategy lives.
Exactly. Think of it like this. If investing is a journey, your broker is the vehicle. Some people are happy with a reliable car that gets them from point A to B. Low fees, simple tools, maybe a bit of automation. Others want a full-on sports car with data dashboards, technical charts, and every trading tool under the sun.
Yeah, and in 2025, those vehicles have gotten seriously advanced. The global online trading market topped $14 billion last year and is expected to double in the next decade. That means competition is fierce. And as investors, we benefit from that.
So today we'll break this down. What makes a great broker in 2025? How to match one to your investing style, and the key things to watch out for, from regulation and fees to tools and education.
Let's start with the big question. What actually makes a great broker today?
Good place to start. These days, brokers aren't just order executing machines. They've evolved into full-blown ecosystems. You've got advanced analytics, multi-channel access, AI-based advisors, real-time alerts, and my personal favorite, educational hubs built right into the platform.
Totally. The idea is to empower investors to make smarter, data-driven decisions. And mobile trading is the game changer here. Around 44% of all retail trades now happen through smartphones. That's wild.
It really is. I remember when mobile apps were just for checking balances. Now people literally manage complex portfolios from their phones. It's all about accessibility.
And with that, the user experience becomes crucial. Fast, intuitive, and reliable apps win. If an app freezes when you're trying to sell during a volatile moment, that's not just annoying, it's expensive.
So true. And that's why matching your broker to your investing style matters more than ever.
Let's talk about that, because not everyone trades the same way.
Right. There are basically three big categories of investors: the full service type, the independent trader, and the automation lover.
Full-service brokers like Charles Schwab cater to investors who want professional guidance, almost like having a financial coach on call. They might charge more, but you're paying for premium tailored advice and premium tools.
Exactly. On the other hand, independent traders, think Fidelity or Interactive Brokers users, prefer freedom. They want advanced technical tools, maybe lower commissions, and they trust their own research.
And then you've got people who just want to set it and forget it. That's where platforms like eToro or Wealthfront come in. They use algorithmic strategies and diversification models to keep your portfolio balanced automatically.
I love that diversity of options. There's literally something for every personality. And according to a study by Bankrate, aligning your style with the right broker can boost your annual returns by up to 12%. That's huge.
Yeah, that's not just a small tweak. That's the kind of game that compounds massively over time.
Now, here's something I think many people underestimate: regulation.
Oh yes, that's the unglamorous but absolutely essential part. A broker might look slick, but if it's not regulated by a credible authority, it's a ticking time bomb.
Couldn't agree more. In the US, we've got the SEC and FINRA. The UK has the FCA, and in Peru, it's the SBS. It's all about accountability and investor protection.
Exactly. Regulation ensures that client funds are kept separate, there's transparency, and in some cases, like the US, you even have SIPC insurance that covers your assets if something goes wrong.
According to Mortar Intelligence, more than 60% of retail investors now say regulation is the most important factor in choosing a broker. That's reassuring. People are getting smarter.
Yeah, and it's not just about avoiding scams, it's about peace of mind. Knowing your money is protected lets you focus on strategy, not security.
All right, let's talk about something a bit more tangible: costs.
Ah, yes, the famous zero commissions trap.
Exactly. A lot of platforms shout free fees in big letters, but if you dig deeper, you find spreads, inactivity fees, withdrawal fees, even conversion fees nibbling away at your profits.
Morningstar found that just a 1% difference in annual fees can translate to tens of thousands of dollars over the long term. It's insane.
That's why smart investors read the fine print. It's not the visible costs that hurt, it's the invisible ones.
Right. I always tell people if you don't understand how your broker makes money, you are how they make money.
That's a great line, Daniel, and it's so true. Even small inefficiencies like slightly higher spreads can erode performance over time.
Now, let's shift to the fun part tools. What kind of features actually make a difference in 2025?
I'd say integration and intelligence. We're seeing AI-driven insights, strategy simulators, real-time market data, and even social sentiment tracking, which is fascinating because it helps you gauge investor mood in real time.
Yeah, that's powerful. Take Interactive Brokers Trader Workstation. It's got APIs, algorithms, and backtesting capabilities. It's a playground for advanced traders.
Or XTB's XStation 5, super intuitive with built-in calculators and even Spanish language support, which is great for Latin American investors.
Then there's Fidelity's Active Trader Pro. Highly customizable, perfect for traders who like control. And of course, eToro, still the pioneer of copy trading. It's such a cool way for beginners to learn by following pros.
Totally. And the best part, you can test these platforms in demo mode before you risk real money. That's such an underrated step, like taking a car for a test drive before buying it.
I love that analogy. And speaking of underrated things, let's talk about support and education.
Yes, because even with all the tools in the world, mistakes happen. The difference between losing and learning often comes down to having the right guidance.
Exactly. And a report by XTB actually showed that brokers who include structured educational content reduce beginner mistakes by up to 40%. That's massive.
And the best ones go beyond FAQs. They have live chat, multilingual support, webinars, video tutorials, basically a full learning ecosystem.
I think this human touch is what separates good brokers from great ones. Technology handles transactions, but education builds investors.
Now, for our listeners in Peru or Latin America, this part's for you.
Yes, because the local market is booming digitally. More Peruvians are joining global trading platforms than ever before.
Totally. Platforms like Interactive Brokers give access to 150 plus markets, while XTB combines European regulation with great local support. eToro, too, is super popular for its friendly design and Spanish interface.
And don't forget about the tax side. Capital gains in Peru are taxed at 5%, and any income earned abroad must be reported to SUNAT. It's important to stay compliant.
Exactly. Investing globally is exciting, but you've got to play by local rules.
Let's zoom out and talk about the future of digital trading.
Oh, yes. This is where it gets really interesting. We're seeing three big trends: automation, sustainability, and inclusion.
Robo-advisors are growing more than 12% per year. Mobile-first platforms are almost half of retail trading now. And younger investors are demanding both transparency and green, sustainable options.
It's such a shift from the old days of buy low, sell high. Now it's invest smart, invest consciously.
Exactly. And in Latin America, startups like Hoppy, Tree, and Capital.com are leading this charge, using mobile-first models to make investing accessible to everyone, not just the elite.
All right, Daniel, before we wrap up, let's leave our listeners with some takeaways.
Good idea. First, regulation. Always verify your broker is licensed by a trusted authority.
Second, understand the full cost structure. Free isn't always free.
Third, test their tools. Use demo accounts to get a feel for performance before you commit.
Fourth, never underestimate education and support. The best brokers grow with you.
And finally, choose a broker that matches your goals and your personality. Investing isn't one size fits all.
Beautifully said. Or as Warren Buffett puts it, risk comes from not knowing what you're doing. Choosing the right broker is really the first step towards investing with confidence and purpose.
Exactly. Knowledge is your greatest asset.
Thank you all for tuning in to Money Moves Weekly. I'm Emma.
And I'm Daniel.
We hope this conversation helps you make smarter, safer, and more confident investment decisions in 2025. See you next time.